Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 3rd of December 2022. And we're publishing our gold and silver weekly update for the weekend in the 2nd of December. We saw both gold and silver rise considerably last week. Why? Let's take a look. Okay, looking at the performance of precious metals. First, we can see that gold rose $43 last week, rising from $1,755 to $1,798, having hit a high of $1,804 and a low of $1,739, a rise of 2.4%. In sterling terms, gold finished the week at £1,463, that's up £11. And in euros, it closed at €1,706, that's up €19. Silver rose $1.53, rising from $21.64 to $23.17, having hit a high of $23.26 and a low of $20.89, a rise of 7%. In sterling terms, silver closed at £18.85, that's up 95 pence, or almost a full pound, and in euros it closed at €21.99, that's up 1.21 euros. The gold to silver ratio fell from 81 to 1 to 77.6 to 1. Now the difference between gold's high and low was $69, and the difference between silver's high and low was $2.37, more than double the previous week's difference. Now we did predict last week that we expected to see gold trading between 1700 and 1800, with 1675 and 1850 as outliers, and silver trading between $20.50 and $22, and 1950 to $23 as outliers. Well, gold traded within our normal range for most of the week, moved slightly upwards into our outlier range, but closed within the normal range. Silver traded more aggressively, but kept within our normal range until Thursday, and then moved into our outlier range and actually managed to close 17 cents above our $23 prediction. Now we shall discuss the reasons for these movements after we've looked at how other financials have fared. Bitcoin currently stands at $16,992, just shy of $17,000, up $410, though earlier in the week it was actually down around $500, so it's had a sort of almost $1,000 reversal. Equities were mixed on Friday, but marginally stronger over the course of the week. The Dow Jones closed on Friday at 34,429, that's up just 82 points on the week. The S&P 500 closed at 4,071, that's up 45 points on the week, and the Nasdaq Composite closed at 11,461, that's up 235 points on the week. Oils were higher this week, though they did dip on Friday. Brent crude closed at $85.57, that's up almost $2, $1.94 in fact, and WTI crude closed at $79.98, just shy of $80, up $3.70. We suspect the disparity between the two will change a little next week. The dollar index stands at 104.54, that's down 1.41 points, following a previous week's fall of 0.98. So clearly the dollar is on the decline, but still holding strongly well above the 100 level. Now before we look at why gold and silver rose and why the US dollar fell, let's take a look at what data was announced this past week and what we can look forward to this coming week. Okay, we'll run through this reasonably quickly. Last week, we saw the Consumer Confidence Index for November being announced, slightly higher than anticipated, but below October's figures. Taking a look at Wednesday's announcement of the ADP employment report, we can see that jobs announced for November, though positive, were considerably lower than expectations and those announced in October. We also had comments made by Fed Chair Jerome Powell on Wednesday at the Brookings Institution. And we'll cover that in a few moments, because that speech made a hell of a difference to markets and gold and silver prices. Then on Thursday we had the PCE price index coming in at better than anticipated. The main PCE came in at 0.3% for October, but the core PCE price index came in at 0.2%, and that compares with expectations of 0.3 and September's 0.5. This has meant that the main PCE index year on year has fallen in the previous month on an annual basis from 6.2% to 6%, and the core PCE from 5.1 to 5. And we can see very quickly that manufacturing were closely aligned with expectations. The non-farm payrolls, however, on Friday were a little surprising because they were higher than expectations, and when one compares it to the ADP report, actually went against the trend a little. And we can see the non-farm payrolls came in at 263,000 new jobs for November, compared with expectations of 200, and not far off the previous month's figure. The unemployment rate remains at 3.7%, while, and this is noteworthy, average hourly earnings have actually increased. In fact, doubled compared to expectations and higher than the previous month at 0.6%. Next week, we have the final PMI services report, both from S&P and ISM, quite noteworthy, and factory orders. On Tuesday, we have the trade deficit. On Wednesday, really consumer credit. Thursday, jobless claims. And Friday, the producer price index, plus the UMH consumer sentiment index. So whilst this information next week is quite important, frankly, it's going to be the following week that will be even more important, because then we'll have the Fed's decision on interest rates, and some of these will have an impact. So what did Fed Chair Jerome Powell actually say on Wednesday, which caused the US dollar to fall and precious metal prices to rise? Quote, "Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting," unquote. Thereby strongly suggesting that December will have a rate hike, but it's more likely to be 0.25% or 0.5% rather than the 0.75% we've seen in recent months. Our view has been it will be 0.5%, whilst many economists are predicting 0.25%, though we suspect that Friday's non-farm payroll report may change their minds towards our calculation. That said, of course, we could be wrong, but there are so many assessments and conclusions by reputable bodies suggesting that even on their current course, it could take the Fed up to as long as 5 years to get inflation back to 2%. Now, we published a midweek update on Thursday, going into this a little more deeply, and we've placed a link to that in the description box below. Now, going back to gold and silver. Although gold fell back a little on Friday, towards the end of trading it did gain some upward momentum, and we can see this spilling over into next week. We should also bear in mind that traditionally gold and silver, in the main, do quite well in December moving into January, and this could indeed prove to be the case this year. Technical analysts can see gold moving towards the 1850 level this week, and if given enough momentum, could indeed see gold reach $1,900 before the end of the year. Whilst we can see more strength, very short term, there is so much hanging on what the FOMC will announce on the 14th of December. We're keeping our powder dry for the moment. Can we foresee 1850 next week? Yes, but we can also not rule out a dip down to 1750, especially if investors decide to sit and wait to see what the Fed actually does. Now, silver broke through strong resistance at 22.50, which may now act as support. And as we stated last week, if $23 is broken, then $25 could be on the cards by the end of the year. And of course, we are holding above $23 at the moment. We still, however, come back to the job figures announced on Friday. They were better than anticipated. And although PCE has fallen a little and the market has got excited about Jerome Powell's comments, we believe they've misrepresented them somewhat, or certainly misinterpreted them. Powell did suggest that the rise in rates may not be as aggressive moving forward, but he also suggested that the duration may be prolonged. So although December and early next year may see smaller rate increases, there may be more of them, or they may continue for longer. That will ultimately act as a headwind for gold and silver as the dollar gradually strengthens. But for the moment, though, Other countries are experiencing even worse inflation than the US, and to some degree their more aggressive stance on interest rates may cause the dollar's rise to remain in check. We live in an interconnected world, and what one major economy does with its currency and rates can indeed have an impact on another. So where do we see gold and silver trading next week? Well, we envisage gold broadly trading between 1750 and 1850, with 1725 and 1875 as outliers. And we see silver trading between 2225 and 2375 and 2150 to 2425 as outliers. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.